Yeah, so just jumping on to record a video, starting off with a completely blank chart. I just want to walk through every single step of my process and my trading plan, what I look for, how to analyze direction. Again, I'm just doing this mostly for myself. If someone finds benefit in it, that's great. If not, that's also great. So just starting off, just looking off on the weekly. So the first thing I want to do is identify the range that we're trading within. For me to pick my highs and lows, I want to identify the most recent large significant break of structure. And what I mean by that is if we can look at this price action here, so we can see we're quite bearish, making lower lows and lower highs. And then at this point here, we've shifted and we are built bullish, making higher lows, high highs and higher lows. So to me, this is the important break of structure. So boss up. Now, what that allows me to do is once I've done this, what I want to find is the lowest point and the highest point since that break of structure to allow me to drop my range. So I'll do that by doing this. And what we want to do is now we've identified premium and discount. What we want to do is see price to come back down into discount before purchasing it again to push it up into premium. So essentially, we're looking at things to trade off of below this blue line. So what we can see here is we have this order block. We have some imbalance and things in here. Obviously, this is the weekly. For me to wait to trade from here to here, that's 600 pips. That's not going to happen. We're intraday traders, so we are going to look at lower timeframes. But essentially, what I'm looking at overall is that I can expect the next coming weeks or month for AU to be bearish up and until we reach this point, at which we will see whether we will continue bearish or whether we will have a reaction from here and continue to the upside. So essentially, I'm looking for price to continue to make lower lows and lower highs, tap into here, react off of something over here, because as we can see here as well, this range is important because there was a lot of volume introduced from here. Inside here as well, we'd have a flip zone. As you can see, price interacted with supply. We failed to break, or we have a wick. We'll come back down, and then we had enough bullish momentum to break. So inside here, there'd be a flip zone. So on our way down, I'm actually anticipating a reaction from this point. However, because it is still in premium and not in discount, I'm not looking for the move to end there to push back up to the upside. However, it is a possibility. So we will be looking to trade off of this if we get a 15-minute shock up. But essentially, I am still waiting for price to come down into this zone. So we'd see at this point, we either make a lower low and continue, or we actually break it, make a higher low and go to the moon. Okay, they're the two sort of options I'm looking at. There is also a zone further down into discount, which is here. I'd also like to keep my eye on. Again, this is such a long time in the future, but it is important just to know where we are on the higher time frames. Again, a lot of bullish momentum was introduced. This caused a chop on the weekly, which is quite significant. So yeah, these are the two main zones I'll be looking at. We also do have inducement of these equal lows right above this zone. So potentially this zone could actually be better, but obviously price doesn't have to come down into discount at all. And if it does, it doesn't have to come all the way down into here. We just react, we don't predict, but I'm trying to analyze what my overall bias is for price action. So knowing this, I can expect that we will, like I said, come here. At this point, we might have a slight reaction up, but I'm looking for this to just be substructure, C minus structure, come back down to break this actual structure, come back up again, so on and so forth. Okay. So knowing that, I'm looking for sells. What we can do now is we have these zones, we've marked them that it's a order block inside discount. I can get rid of this range just to keep the charts nice and clean. We drop onto the daily. Okay, we can see that this V-shaped reaction here was off of this order block that was resting within here. You can see we actually swept it just ever so slightly, as we would have had resting liquidity here as well. So what price would have done is would have just tapped into that liquidity to fulfill more buy orders to then push price back up. Can see, however, though, if we look at how strong this bearish structure or this bearish momentum was, as opposed to how corrective this bullish structure is. So something we can do as well is just look at how long it's taken. So that's 35 days for it to come down 580 pips. And then in 35, I don't know if we have 35 days here, how we do. So in 35 days from the downside, which is from here to here, we only came up less than half, 288 pips. We can also just see like a lot of bearish momentum, slight pullback, bearish momentum, slight pullback, bearish momentum, so on and so forth. Whereas here it was a bit rangy. Nothing really happened here. It was sort of a pause in the market. Again, the red candles, the bearish candles, you can see are quite full body candles, whereas the bullish ones are not. Okay, that's just something to keep in the back of our mind too. So we swept the liquidity under this daily order block that we see to the left. We have had a reaction to it. Price has come back down, sort of left this inducement above. So we can wait for price to come back to this level to see if we are going to have enough orders to fulfill this going back up to maybe retest these levels. We can see here that we've swept liquidity. We swept liquidity from here. And then we had a chalk. Whether you want to use wicks or full body candles is fine. Cool. We had the chalk. We also had a flip zone. So what we can see is price came down, reacted with this supply and failed to actually close with the body above, came back down again, same thing. And then, well, actually this move actually caused the break, and then price came back into this zone to trade off of, and that's what actually allowed it to move to the upside. So we could have actually traded off of this bearish candle. Obviously this is the daily, so we're not swing traders, or I personally am not a swing trader, but you can see that the markets are fractal. So whatever the same sort of setups we're seeing on the 1 minute, they occur on the 1 hour, they occur on the 4 hour, they occur on the daily, they occur on the weekly. Cool. So now we know that we've swept this liquidity, we've taken orders to the upside, we've had a chalk, so we can expect to trade bullish for a little while. One thing I like to do as well is just drop the range as well on the daily. So again, how do I know that this is the range that I want to be trading off of? Well, it's because the most significant break of structure is this one to the left. Why is that the case? Because at this point we were bullish, making higher highs and higher lows. So when we come down to here and interact with this level of demand, if this structure was to remain bullish, we would have seen something like this. However, it was not the case. And what ended up happening was we broke straight through. So at this point, we're bullish. At this point, we are bearish. Okay. We have actually come back up to 50% of this range. So whether or not this pullback is now complete is unknown. We could see a further test as to this supply or this supply before fully coming back down, but we will wait for confirmations for that. Currently, we could have to actually tap back into this demand zone for this move up, but we'll drill into that as we go down into the lower time frames. Okay, so this is our daily range. We've tapped 50%. We've had a reaction. Wasn't enough to come back down into these levels. What we could have probably reacted off of is this whole pivot demand, as we can see there. So this pivot demand was strong in breaking this high. However, we printed a doji or a shooting star. This is actually an evening star, the three candle formation here, and we've come back down. Price has chopped to the downside, so we've taken liquidity there. I'll just mark it up for you. Take liquidity there. Chopped. So we could expect price to now come back up potentially into this, which also is actually a flip zone, before coming back into this demand to see whether price wants to remain bullish to retest these supplies or just break through and continue that push down into the weekly order blocks we saw that were in discount. So why this is also a flip zone is if we look into this. So this was our demand level. What happened here if we zoom in is price came up, price came back down, interacted with this demand level, couldn't actually break through, price came back up, and this shooting star as well would be the supply candle that actually caused this chop. So we could look at trading out of this zone. Again, we're still on the daily, so that's quite a long way away. We will be looking at taking shorter intraday moves in between, but let's have a look if we go down to the 4 hour now. So again, what we've now accomplished is that overall in the weekly, we are still bullish. We are waiting for price to come back down into this area to see if it's going to have enough orders for us to remain bullish, or whether we will break through and retest. This would be our daily low. It's actually our weekly low. As long as this holds, we are bullish on the larger time frame. But obviously, up and until this point, whether we come back down to here, we are bearish for price to return to these areas, and then we will see prices intentions when we arrive. So we have our daily range. We know that we've had a shock to the downside. We've fulfilled 50%. We've mitigated supply. So we could look at this whole pivot supply here. Okay, prices come back up into almost 50% of that zone. We can obviously refine this if we were to drop down. And the only issue I'm seeing here is if this was the actual last tap into supply, we would have liked to see a stronger reaction down. The fact that this demand held shows that price is just currently in a battle between supply and demand. And we just need to sort of see a large influx of orders to see which way price really wants to go. Okay, so we know we've filled that now. We know we've got a flip zone here. Just want to keep the charts nice and tidy. So I'm going to get rid of some of these drawings, get rid of this range, drop down to the 4 hour. Again, let's look at our 4 hourly range. So how do we mark out our range here? So to me, I can see this straight away as the significant break of demand. Why is this a significant break of demand? Well, this is a significant break of demand because at this point we were bullish, making higher highs and higher lows. Obviously, this is lower than that, but that's just a corrective pullback. Making higher highs, higher lows. Again, this is just within the complex pullback. And then this point is important as we broke the low that made the highest high. So to me, that is the break of structure. And now what I want to do is identify in that range, the highest point and the lowest point. So now we only need to focus on this little bit of price action here, knowing that our overall target is either this demand zone or the supply zone, which was further up here. Okay. There are sort of the range that we're trading within. So on the 4 hour, I can see we've broken demand. So we had a break of structure to the downside. What we can expect now is a pullback maybe into here, which also aligns with 50% of this 4 hourly range, to then see continuation into this demand, at which point we'll wait to see price's intention, because we really cannot say whether price will remain bullish to retest this and then return further down, or if price will just fall straight through this demand. Okay, there are going to be orders that need to be filled in this area, so there will be a reaction. Whether the reaction is strong enough to push price all the way back up to supply is yet to be known. We'll just have to wait and react to see how price acts at those levels. Okay, so now what we can do is mark up this supply, which we'll refine on the 15-minute, and mark out this demand. Get rid of this. We know that this is in premium. We can actually just mark out this as well, which was our flip zone from earlier. Why was that the flip zone? Because when price came to this demand, failed to break, came back up here, and then this was actually the move that caused the chop down. And this is where the bearish orders and the bearish momentum was introduced. So really, this is actually a better target. This was more like a decisional, whether or not we get just a slight reaction and then continue higher to test this flip zone is yet to be known. But these are the two areas above that we're looking at, and this is the area below we're looking at. So that's what we need to know at the moment. Again, let's just keep the charts nice and clean. That's all we're looking at. Drop to the 15-minute. Now the 15-minute is a little bit more messy. If we're trying to look at the most recent break of structure to identify our range here, we can see that it's, to me at least, it's this. Why is that? Because at this point, we were bullish. This is still, oh, hang on a second. Where is the most recent breakout structure that's important to me here? So here we're bullish, bearish. Okay, that's right. We don't need to use this right now. We can just, okay, actually, it's here. This is what I was looking at. So boss down. Okay. So the range that we're now looking at is here to here. Price has already come back into 50% of this range, and we have pushed back up, interacting with this big supply candle. However, it's not yet fulfilling enough orders to see price push back down. We are overall reacting to this supply to the left. Okay. Drag across, probably refine this on the 5-minute. So we've refined this supply level. One thing I've sort of noticed through my back testing and through everyone else talking on the charts and everything else is that the first sort of tap into supply often gets swept. And as we can see, if this truly was the decisional point, we would see price react from here and make a lower low. However, if we look at it like this, we can see that our swing low is here, swing high is here, made a higher low, and then we failed to make a higher high. Okay, so now this is actually a targeted low. So that's something to keep in the back of our minds as well. Mark that out on the chart actually. Get rid of this 15-minute range. We can see that this is a targeted low. And why that's also important and good to note is there's equal lows resting just there, and it's inducement above a larger, more important demand zone. So let's also mark out this as inducement. And we know that this low is targeted and we want to see it run. We can also see all of this trendline liquidity building up through here. And we can see that price came and fulfilled this liquidity void and is now moving from one Dorito to the next. Okay. So now we know our bias is shorts up and until this demand point, which we framed from the higher time frame, higher time frame. And we want to see at this point where the price will dip into demand, give us a chop, and push back up into this flip zone above, or whether we're just going to fall straight through this demand and retest the lower demands, which were in discount of the daily range. Okay, so now how do we actually enter short here? Okay, let's get rid of these Doritos. Liquidity void here is filled. We have a void here to be filled. We have this extreme demand here, which I actually took a long off of yesterday. This as demand. Okay, we have all of this liquidity above. We have this supply that was respected. So that wasn't actually tapped just yet. So it's still unmitigated. If we were to use maybe these buy to sell candles, take 50%, even that hasn't been touched. So it's important to note that. So this could actually just be inducement above, price to get more liquidity for the move down. Let's keep this consistent. This is actually inducement. And this was the liquidity, which has actually been swept. So this is actually important here as well, because this zone actually swept the liquidity above these equal highs. So all through here, liquidity. Okay, we have inducement above. We have price reacting to this demand. We have quite a corrective pullback into this demand, and we haven't really had much of we haven't had a V-shaped reaction like we would have liked to see. So we can see that price could be correctively pulling back up, retesting this supply before taking all this trendline liquidity and going to mitigate this lower demand zone. Whether this demand zone will hold or not is yet to be seen. However, it's very unlikely given that this is a targeted low as it failed to put in a higher high. And we have these equals to be swept, and we have a larger demand zone below. So what I would like to see is this demand zone fail, okay, which would leave this to be a flip zone. So if we go down one more time frame, you can use this as our flip. It's also nice that we've got these equal highs just above as the demand to supply flip. This out as inducement. Want to see price break below and create a chock. So we've swept the liquidity there, we've chopped below. Want to see price correctively coming back up to this zone, and then a strong tap in and a chock down, and price returning all the way to demand. Very wonky arrows there, but you get what I mean. So let's mark this out as well. This has actually been swept by this, so we don't need to mark this. We'll mark this here for the liquidity that the chock took. We've taken that liquidity there. Would have liked to see this actually tap back all the way into here, but maybe we're just reacting off of if we expand this all the way down to these buy sells. So we've taken the liquidity above these highs. This chock has yet to happen. Essentially what we'd like to see is price break through this demand and actually create the chock. This would therefore be the flip. We could even set just the limit there or wait to see confirmation on the 5 or 15 seconds. This sweep this, so the high here is 596 and that's 596. This is 597. Okay, so that's not ideal. Because these equal highs haven't actually swept the liquidity above this. So we could actually see price come back up to mitigate this, which would be a buy to sell in the lower time frames. That looks like in the 1 minute. Yeah, so these buy to sell candles. We could see price come all the way back up to the extreme, but actually looking at it on the 1 minute, this is a much nicer entry. I know we have this just above. Okay, as we can see, price might actually just tap into this demand to supply flip, break through, come into here, then create the chock, which would really make this a flip. So that is best case scenario. Okay, and then we could take a short off of here, 1.5 pip stop. Run that to the lows. I would take partials here, 10R, and then even just target this targeted low. So that's what we'd like to see. Get rid of this. Hopefully price sweeps this, taps into this flip level, which is not yet actually a flip, but if we do react off of this supply and break this demand, creating a chock, then it will be a flip. And then seeing how prices actually come into that zone and then selling it down into demand. Bit of a longer video. Not 100% sure if I'll be posting this one, but yeah, just walking through step by step, analyzing market direction from the weekly to the daily to the 4-hour, looking at the ranges that we're trading within, knowing where premium discount is, seeing the most recent and significant breakup structure, finding the chock, seeing the liquidity and inducement build up above it, and then looking for our entry model. So there we go. That's everything that I wanted to share today. Hopefully, if I do post this and you get some benefit from it, please let me know, and let me know if I should continue making any more of these videos in the future. But yeah, this was mostly just for myself.